Welcome to the Deal Calendar. I'm Mary Kathleen Flynn. The Deal Calendar is our new video blog where we give you a preview of upcoming events that are likely to affect deal making. It's kind of a work in progress, so if you have some suggestions of dates you think we should be covering or any other ideas, please send us an email message at reporters@thedeal.com. Well, since our last edition, there's been a lot of news in deal making. The Clear Channel case settled, HP bought EDS, Cablevision bought Newsday, and Carl Icahn, activist investor, waged a proxy battle for Yahoo. The week of May 19th has a lot of earnings coming up, including those from retailers. We'll be talking with Corporate Dealmaker Suzanne Stevens in just a moment to take a look at one of those retailers. But first, let's take a look at the week of May 19th. On Monday, May 19th, the HSR Act expires for British drug company GlaxoSmithKline's purchase of Certus Pharmaceuticals. On Tuesday, May 20th, discount retailer Target will report earnings. The company recently sold half its credit card business for $3.6 billion. Meanwhile, Home Depot will also be reporting earnings. The struggling retailer finalized a deal to sell a unit at a lower price last year. And luxury retailer Saks, which may be a Target, is expected to report earnings of 17 cents per share. On Wednesday, May 21st, Limited Brands announces, and Talbots holds a conference call to discuss its recent earnings. On Thursday, May 22nd, investors will be eyeing earnings from Gap, where a new CEO is trying to wage a turnaround. And Children's Place, which recently said it would okay buyout talks with its former CEO, will be revealing earnings. And on Friday, May 23rd, Draxis Health shareholders will vote on the proposed merger with drug maker Jubilant. Joining me now to talk about Talbots is Suzanne Stevens from Corporate Dealmaker. Suzanne, they've already had their earnings announcement, but now on the 21st, they're going to do the conference call. What are we likely to hear?
Well, the news is not great. Comparable same-store sales, which is a key measure for retailers, were down at Talbots 10%. So that's not great. And in this economic environment, it's not really surprising. But the bottom line is that Talbots has really been in a slow decline for at least the last 5 years. And in fact, over the last year alone, Talbots has lost half of its value. About this time last year, Talbots was trading in about the $20 range, and currently it's closer to $7. So not good.
Not good. What's the main problem that they're having?
Well, I mean, you and I know Talbots. I mean, we're the key demographic. It's women 35 and older. It's a very important demographic, a really coveted demographic. The problem with Talbots is its clothing, its product has not kept up with the taste of that demographic. Their clothing is pretty conservative, generally.
Kind of the preppy look,
still. Kind of the preppy, right, and that look is not really what's in now. It's not what women in that age group generally are interested in. So they really haven't been able to address that kind of key fact, and as I mentioned, their earnings have really suffered because of it.
Now, they had an acquisition that seemed to be trying to deal with that.
They did. It's the only acquisition, actually, that Talbots has made. Talbots is a 61-year-old company. They've made one acquisition, and they viewed J. Jill as their ticket to growth. They knew they needed to do something. So in May of 2006, they paid about $517 million for J. Jill. Now, J. Jill targets about the same demographic, women 35 and older, but the clothing is really different. It's more artsy, it's more earthy. It's
a little more bohemian.
A little bit more bohemian, definitely very different than the conservative style that Talbots was known for. So understandably, it seemed like it was a good match. Unfortunately, Talbots has not been able to really deliver on the promise of that execution.
And is that because they've been kind of neglecting it, leaving it to its own devices?
Well, I think the problem is that Talbots was a struggling company. J. Jill was a struggling company itself. When Talbots acquired J. Jill in the year prior to that, 2005, J. Jill posted annual sales of about $450 million. In 2007, sales were off to about $327 million. And comparable store sales for J. Jill in the first quarter were down 20%. So I think what happened is, Talbots understandably is focusing on its core brands. That's the majority of what they own. They have over 800 stores and only about 250 are J. Jill. So Talbots was very focused on turning around its own core brands, and I think maybe didn't have a lot left over to focus on J. Jill, which also needed some attention.
Now, moving forward, I understand that Talbots has come out of a strategic review. So what are their plans for a turnaround?
Well, they brought in a new CEO in August of 2007, so about 9 months ago, and one of the first things she did was initiate this strategic review. And that's important. They had somebody come in. They never divulged who the consultant was to come in and do the strategic review, but they did initiate that. And in January announced, as a result of that they were going to close all of their men's and children's stores.
They have men's stores?
I didn't know they had men's or children's.
I've shopped at the children's stores.
So they have apparently currently 78 of those stores, and they will all be closed by about September of 2008. So that was a big thing. They also realigned the company around 5 growth areas, one of them being the J. Jill brand, so we'll see what happens with that. And I think significantly, Trudy Sullivan, the new CEO, has completely overhauled the management team.
So anybody on the new management team that's likely to update the clothing?
Well, they created a new position actually called the Chief Creative Officer, and the guy that they brought in to fill it is Michael Smaldone. He had been the Chief Design Officer for Anne Klein. So he comes in with reputation. He hopefully will come in with some new ideas because obviously all of this is geared toward reinvigorating the brand.
Well, maybe we'll even hear from him on the conference call. That would be interesting.
Yeah, possibly.
All right, thank you very much, Suzanne Stevens from Corporate Dealmaker. And thank you for watching the Deal Calendar. I'm Mary Kathleen Flynn. Check back with us next Friday for the next edition.